Good morning, you're watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. The entire Philippines is now at critical risk for COVID-19 after the country logs yet another record number of infections.
The highly contagious Omicron replaces Delta as the dominant COVID 19 variant among the infected patients. Experts are now calling for stricter restrictions nationwide.
Despite the onslaught of the Delta variant globally in October last year, FDI inflows to the country rose for the fifth straight month.
And the government is appealing to Indonesia to lift its ban on coal exports as the Philippines remains heavily reliant on coal for power generation. We begin our broadcast with the worsening COVID 19 case count here in the country. Health Chief Francisco Duque says the Philippines is now considered as under critical risk for the virus. Duque also announced that Omicron has replaced Delta as the dominant variant among the infected patients.
And as infections continue to climb, many sectors are being paralyzed from air travel to railways and even government services. Some experts are now calling for stricter mobility curbs, but the government says the situation remains manageable. Maricel Halili with the rest of the story.
From just 400 cases before closing out 2021 to a new record of 33,000 COVID-19 cases on Monday. The question now is, should restrictions revert to the stricter alert level 4? For National Task Force Advisor Ted Herbosa, it's a possibility.
Ang maganda naman nung dineklara dito sa NCR ang alert level, nakita ko na sumunod yung ating mga kababayan. Kumonti talaga ang tao sa labas.
Based on Octa's projections, cases have yet to peak by mid-month. But even before that, situation in Metro Manila is becoming more and more critical as hospitals slowly get overwhelmed. Octa suggests a more mobility curbs to control the rapid spread of the virus.
We can slow it down by decreasing capacities in establishments and public transportation. But again, that's a decision of the government.
But acting presidential spokesperson Carlo Nograles goes back to government parameters, such as the 2-week growth rate, average attack rate, and the total bed utilization. He says that while cases are undeniably high in NCR, hospital utilization is still considered moderate, making a shift to alert level 4 unlikely. Even Metro Manila mayors agree.
Kung titignan mo naman, pinakita nga namin yung mobility on their own, ultimo ang mga tao nagsiself-regulate na. Ultimo sila, hindi na sila lumalabas.
Under alert level 4, cinemas won't be allowed to operate, and the seating capacity of all indoor venues like restaurants will be decreased to 10%. Local officials and even private establishments can also impose mandatory wearing of face shields. But for Presidential Advisor on Entrepreneurship Joey Concepcion, limiting the movement of unvaccinated individuals is a better alternative.
Because they are the ones that will overwhelm the hospitals. And when the hospitals are full, then there's no choice.
For now, Alert Level 3 will still be implemented in Metro Manila until January 15. For News 5, Maricel Halili, We Are One News.
Foreign direct investment rose for the fifth straight month in October last year to the tune of $855 million. That's almost twice than the $430 million FDI net inflow recorded in the same month in 2020. The October print was also higher by almost 30% than the $660 million logged in September, which was the lowest in 4 months. For the 10 months to October, FDI net inflows hit 8.1 billion pesos, up by more than 48% from the previous year. The BSP said cumulative FDI net inflows rose on the back of a 79% increase in non-residents' net investments in debt instruments. Meanwhile, the country's trade deficit widened by almost 120% in November. This as exports rose more than expected at 6.6% year on year, while imports came in higher by 36%, also beating estimates and October's increase of 25%. Now, then, on the back of October FDI's doubling and November trade deficit ballooning, how's the local unit doing?
All right, very interesting to watch the peso this morning, Jess. It's now trading at 51.205 to the greenback. And if you see my chart here, at least since 2019, it's actually strengthened towards the middle of 2021. And since the month of June, it's just gotten weaker and weaker. And you did already mention, a big issue could possibly be that widening trade deficit. In fact, yesterday already, um, even before these trade figures came out, the currency already slumped to a 22-month low. We are the weakest since March of 2020. And recall that we've already reported some analysts seeing the peso breaking above the 52 level to the greenback. Now, let's take a look at our local bourse and how we're doing this morning, sliding by 0.2% to 7126.83. Now, recall that this does, however, I'll just pull out the 3-day chart so you can see how we did jump yesterday. It was quite that mountain climb. And now, coming back a little bit to reality, and fund managers are expecting exactly that. These swings between gains and losses are going to be continuing just until March. We did end a 5-week slump yesterday, but BDO is saying that we could drop through 6,700 levels. They say that they are looking at defensives like telco, sports. RCBC's Robert Ramos naman says, look for a dip buying opportunity for the reopening stocks because hopefully the reopening is imminent again. So it's looking at property stocks, consumer names, non-discretionary consumer names, possibly retail, and both of them, BDO as well as RCBC are optimistic that the latest surge will be contained. In fact, BDO is looking at a year-end climb to 7,800 levels, and RCBC is looking at between 7,500 to 8,000. So some room to run there. Now, let's take a look at a couple of sectors here. I'm taking a look at the banks today. Flattish, up by 0.05%, so not too bad. This as the Banco Central says they're looking at perks for banks with sustainable practices. They say that they may grant regulatory incentives to lenders if they are doing sustainability practices, for instance, preferential rediscount rates, provisions for higher loans, so that they can extend some green loans and finance sustainability investments. Now, speaking of alternative investing, let's take a look at Bitcoin. It's finally back above 40,000 here. This asset actually dipped below $40,000 for the first time since September, and that was already putting it on pace for the worst start to a year since the early days of that, which was around 2012 when it was launched. The loss of Bitcoin now, if you had invested since the start of the year, is around 14%, and if you did reach that all-time high, which was around 69,000 in early November, you may have lost more than 40% already by now.
Here are the other headlines we're keeping our eyes on. The Philippine government is urging Indonesia to lift its ban on coal exports. Last January 6, Energy Secretary Alfonso Cusi sent a letter to his Indonesian counterpart appealing for the ban to be lifted specifically for the Philippines. In his letter, Cusi said Indonesia's coal ban would be detrimental to the Philippines since power generated from coal comprises about 60% of our country's power demand. Indonesia remains the world's biggest thermal coal exporter. It suspended exports on January 1st after its state power utility reported dangerously low inventory levels of the fuel at domestic power stations.
The Philippine Competition Commission is expected to step up its review of mergers and acquisitions this year once the Bayanihan 2 law expires in September. Now, under the Bayanihan 2, mergers and acquisitions are exempted from compulsory PCC notification as long as their transaction value is less than 50 billion pesos and if they were entered into 2 years from the law's effectivity. Now, once the law expires in September, companies whose parent company assets exceed 6 billion pesos and whose M&A transactions exceed 2.4 billion pesos will once again be required to notify the regulator. Last year, the PCC received only 4 merger and acquisition notifications, 2 of which were approved, while the other 2 were withdrawn since they were exempted from compulsory notification.
The Customs Bureau says Philippine Shell has paid in full nearly 3.5 billion pesos in disputed alkylate import taxes levied against it but under protest. The full amount was settled last Friday. In December, the oil firm made a 1.7 billion peso initial payment, also under protest, and was told to settle the balance by January 10th. The company had agreed to remit the allegedly unpaid taxes, which were levied on alkylate imports shift from 2014 to 2015. It made the payments under protest pending a court ruling on the tax treatment of alkylates to avoid possible suspension.
Customers of Meralco will see lower electricity bills this month. That's due to a drop in generation costs. The rate for a typical household decreased by more than 7 centavos. This translates to a 15 peso reduction in electricity bills for households consuming 200 kilowatt hours and 22 pesos for those consuming 300 kilowatt hours.
Now, coming right up, the Board of Investments has approved the local production of anti-COVID pill Molnupiravir.
More of that and other stories when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess Del Santos.
And I'm Danny Laura. Experts fear that the testing capacity in Metro Manila will breach its limit. That's as cases hit another record high.
Because of this, some experts are now recommending the use of home testing kits, but with the guidance of health professionals. Marian Enriquez with a story.
New COVID-19 cases and positivity rates on Monday hit record high anew. In Metro Manila alone, 52% of tests turn out positive. Guido David of Octo Research warns of repercussions once it reaches 60%.
Pag nagkaroon ng surge dito sa NCR, ang nangyayari kasi syempre, since our local borders are not that tight, yung mga cases, like residents from NCR mag-travel to other provinces, madadala nila doon.
David said that the situation will get worse if cases go beyond the testing capacity.
Kunyari, 50,000 capacity natin. Umabot na tayo ng 50,000. Then, nag-increase pa siya to 100,000. Hindi natin makikita yung 100,000 yun eh. We don't know if it's 100,000. We don't know if it's 200,000. We don't know it's 300,000.
Testing czar Vince Dizon said the country has around 80,000 daily testing capacity, but delays continue to hound the government's COVID-19 monitoring.
Kaya humihingi po tayo ng pasensya sa ating mga kayan. Marami po sa ating mga technician, mga medtech, mga laboratory technician ay nagpo-positibo din po.
That's why some experts are recommending the use of antigen tests at home. Dr. Ronjin Solante said these are cheaper and faster alternative to RT-PCR.
We need to have a close coordination with the healthcare professional para lang we should be guided on how to use it and what to do after being tested.
But if one is already experiencing symptoms, there's no need to wait for test results. Solante said it's better to isolate immediately to avoid infecting others. For News 5, Marian Enriquez, we are One News.
Now, because of this, some experts are now recommending the use of home testing kits. And then the Philippine College of Physicians President Maricar Limpin, meanwhile, tells a big story that most emergency rooms in NCR are already full. But Limpin notes admissions have yet to reach critical level. She also notes that the hospitalizations are more manageable this time around compared with past surges. To this, the group says it's not yet time to increase the alert level here in Metro Manila.
Now, the Trade Department is expecting supply of common drugs to normalize by the weekend. Undersecretary Anne-Claire Cabochan says pharmacies and drugstores are expecting the delivery of supplies in the coming days. Cabochan says the current stockout is temporary due to the increased demand over the holidays. She notes that some manufacturers have the capacity to produce millions of supplies in a month.
The Board of Investments has approved an application by Lloyd Laboratories to locally manufacture anti-COVID pill Molnupiravir. The BOI says Lloyd Laboratories will receive technology transfer on how to produce the drug from India's Optimus Pharma. With an estimated cost of 24 million pesos, the project is expected to start production this month and is expected to provide an annual capacity of 1,400,000 milligram capsules of Molnupiravir. The suggested retail price of the local pill is at 65 pesos a piece, which is much lower than its imported counterpart, which sells for around 100 to 150 pesos each.
Now, with the worsening COVID situation in the country, some experts are calling for an escalation to alert level 4, especially in Metro Manila.
But government thinks the situation is far from getting out of hand, with healthcare use still at manageable levels, with the economy still trying to stage a bounce back. Can the country afford a return to even stricter curbs? Time for insights from Sir Percival Peña Reyes, Associate Director of the Ateneo Center for Economic Research and Development. Good morning, Sir Percival.
Good morning, Jess and Danny, and to all of your viewers.
All right, good. Okay, so
I beg your
possible
pardon.
return to alert level 4.
Yeah.
Can the economy really absorb that at this stage? And does the current situation merit stricter restrictions?
Well, it depends on what the experts are seeing, really, because we're seeing record high numbers right now. So um, I guess we'll have to ride it out and see where this will take us. No, but the alert levels in place, as I understand, these are more calibrated responses to the situation. It's not like what we had in 2020, where we totally locked down the economy, and of course, we all know the repercussions of that. But to trigger a higher alert level, no, we'd have to closely check the number of severe cases and deaths, because these are the more, I think, the more serious stats to look at. But if we're going to look at how this will impact the performance for the rest of the year, I think it's too early to tell. But if experts think that it will peak sometime this month, no, then I think we'll just have to really ride it out and take the necessary precautions.
Okay, given that, sir, what do you think should be the game plan then to arrest the rising cases without hurting the economy so much?
Uh, well, we really, I think, need to improve more on containment. No, containment is one of the biggest challenges that we have, no, because of our decentralized approach to it. If you look at how contact tracing, for one thing, is being done, no, across municipalities, it's a decentralized approach. We don't have a consistent and coordinated tracing system, for one thing. I think we need to sharpen on that and improve on it, no? So that if ever we get to move around, we don't have to keep downloading these applications. So whenever we move from one municipality to another, some don't even have that, no? So we need to have a centralized approach to containment, no, to testing and tracing, really. And to allow movement, one interesting thing that I heard was, as I was tuning into the reports earlier, no, people are self-regulating, which is good. No? So the people already understand, no, that without need for them to be reminded of it, they modify their behavior already. So the trigger for a higher alert level, I think, no, would be based on number of severe cases and deaths. Hopefully, it will not worsen in the coming days. No? But we'll have to ride this out, no? Because still it's something serious. We're in a highly contagious episode right now. No?
Sir, how much in economic losses are you projecting? The government has already pegged it at 3 billion weekly in alert level 3. How much can we still afford at this point? And also, what about unemployment? Do you see, these episodes you mentioned that, we're just going to have to ride it out. Will the unemployment rate be kept at bay for this surge compared to what we were seeing in the past?
Well, if as I understand it, no, if it's going to peak early, I don't think the impact is going to be that severe. No, one thing that I also take note, no, which was mentioned by an Okta researcher, Father Austriaco, no, is that um, while we still need to be cautious, no, Omicron might signal the beginning of the end of this pandemic, no, because of the because it's a natural vaccine of some sort that
Hmm.
gives protection, no, to not just Omicron but to all other variants as well. No? So if it's going to peak early, as I understand it, no, they mention middle of this month, no, then I think the impact would not be that bad. But still, we have to be careful. If this drags on longer than this month, perhaps no, the losses could be staggering, no, if it spills over, no, to the rest of this quarter. I think so. We still have to have guarded optimism, as I call it.
Mhm.
We have to still, no, look at the bright side. I hold on to that statement by Father Austriaco, no, that this might be the beginning of the end, but we have to be guarded. And I'm happy that people are already acting maturely, self-regulating their behavior without much prodding, no, from government. So I think if that will come to pass, no, that this will peak middle of this month, not much impact for the rest of the year. I think it's too early to tell. Also,
Okay.
Mhm. Now, sir, how is the Omicron wave of cases going to hurt our return to pre-pandemic growth? I mean, it seems like exports and imports picked up higher than expected in November. You have foreign direct investments as well. Are these all signs pointing to a fundamental global recovery already being on track?
yes, towards the end of last year, no, I think third quarter GDP numbers surprised us. No, even as economists, no, we're surprised by the turnout, no, of GDP. And also towards the last quarter, we saw more movement and more spending, and at the same time improving COVID numbers. So until recently, when Omicron worsened the situation yet again, um, the improving export numbers might signal a recovery outside, no, other countries recovering, and at the same time, no, the imports, which I would reckon would be much of it production inputs, no, in anticipation of greater economic activity to take place this year, and also perhaps, no, a forward-looking move by rational economic agents, no, because there still are higher shipping costs, delays that they need to factor in, so probably stockpiling on inventory in order to ensure continuous production here domestically, of course. No? So this might be good for us, no, because economic activity picking up towards the latter part of this year. But of course, this has changed recently. We'll have to wait and see, and we hope that this will peak early, as
Mhm.
forecasters want. No? Regarding FDI, while it is good that it has shown improvement, we'll also have to contextualize this in terms of our performance vis-a-vis our Southeast Asian neighbors. I did quick data crunching last month for a paper that I was writing precisely on this subject. Although we are seeing increases, no, but we have to compare it with what our neighbors are getting. And really, as far as latest statistics go, no, we're still way behind what our neighbors are getting. We're not yet as attractive, no, as
Mm.
other neighbors. No? And this coincides also with declining competitiveness ranking, no? Because competitiveness is a major factor for attracting FDI. So I think we need to also see it in that light. No? Well, it's good that there is an increase, but still we have to work on other things that precisely make us attractive. No? And the competitiveness ranking, no, would be highly correlated with our FDI performance.
Sir, final question before we let you go. Can we afford, if we have more lockdowns, and of course we need more ayuda, can we afford that with this ballooning, budget deficit na nga, not just the import export deficit, trade deficit, and then also ballooning budget deficit? Won't this hurt our credit ratings, or did we recover enough during the periods of reopening of the economy to be able to fund eventual more ayuda and lockdowns?
Well, for the for that question, really, about being able to afford it. I guess no, the now is not the time really to scrimp, because the
Okay.
alternative of austerity might be even more harmful if our goal is
Mm.
to jumpstart economic recovery. If we hike taxes now, if we cut down on spending, I don't think that's really going to be helpful. The alternative of austerity might mean more harm for the economy if we focus on that now. So we have worked ourselves in a position where we could borrow easily. That's why we have to capitalize on the good credit standing that we've had, no, in
Mm.
previous years, and probably focus on growing the economy more, no, such that we outgrow our debt. Eventually, we can pay that off. Other economists are sharing also this view that now is not the time to scrimp. Also, to take perhaps a missionary approach in dealing with this crisis with resources that we can muster. If we have to borrow, no, we can. If I remember correctly, much of what we are borrowing in composition is domestic debt.
Okay.
So that we owe ourselves, no. So
Mm.
it's still going to be circulated within the economy, and
Okay.
also the liquidity in banks. We have to also make sure that this also gets circulated, because there's also a lot of liquidity in our domestic banking system that we need to
Mhm.
be able to circulate also. So perhaps government can pick that up as well. But the alternative of austerity might be more harmful for us at this point. So
Mhm.
I don't think it would be wise to hike taxes and
Okay.
cut down on spending and be overly conscious of credit ratings, because
Okay.
we need to jumpstart the economy more, I think.
Okay, so stimulus needed there, especially during these times of uncertainty. Thank you so much, Sir Percival Peña Reyes, Associate Director at the Ateneo Center for Economic Research and Development.
And that's the first look into the business today, this Tuesday, January 11, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.